Hi, this is Jennifer Smith at Murphy Business of Cape Girardeau. We thought we'd put together a short video on what it's like to make an offer on a business. And this is kind of a big deal, whether it's the first time that you've ever made an offer on a business, or whether this is something that you do on a fairly regular basis and you've maybe just not used a business broker before. It's kind of scary and intimidating. So we just wanted to talk you through that a little bit and let you know what to expect. So there are different types of offers that get made. The first type that you may have heard of is called a letter of intent, or an LOI. And this the whole buying process is fraught with acronyms, so just be patient here. So an LOI, what you need to know about that is it's typically prepared either by a corporate attorney or by a seasoned business buyer. It is a non-binding offer, meaning that they are not obligated to buy the business. And although there are portions typically, for instance, the non-disclosure portion of an LOI that is binding, but by and large, the purchase provisions are not binding. And honestly, it's something that we see a lot in bigger transactions, but we don't typically see that very often in smaller transactions. Call it under about $3 million. When you have a smaller transaction, and we'll talk about that first, under about $3 million, provided that you have a business broker in the mix that's representing the deal as a transaction broker, again, not representing the buy side or the sell side, but representing the deal itself, then we typically go straight to a binding offer because it short circuits a lot of the process, and it helps prepare for the final closing documents because it's more comprehensive and it covers more ground. So let's say that you find a business that you want to make an offer on and you think, wow, I'm not sure that I even know enough to make an offer. I would encourage you to talk through what you're thinking with a business broker, because there are some things about a deal that can only be found out in due diligence. And they're only appropriate for that stage of the game, and that's after you've made an offer and it's been accepted and you're under contract. So you really want to make sure that you're talking through what you want to do with the business broker and that they can guide you and let you know whether it's an appropriate time to make an offer or not. What the offer does is cover enough ground so that the seller knows if you're the buyer that they want to work with, and gets us into what's called the due diligence process. The due diligence process can be anywhere from 3 days to 30 days. It just kind of depends on how quickly you want to close on the transaction. And the due diligence process is a time for you to really look under the hood and ask to see anything that you want to see that's not appropriate for the pre-offer stage. So that can be things like tax returns, more detailed financial statements, bank statements. It can be things like payroll and tenure. It can be client contracts, all kinds of things that are really pretty sensitive for a seller to provide. Those are things that are uncovered in the due diligence process. Now, sometimes a buyer will inspect something in the due diligence process, and they either have questions about it, or they're uncomfortable with it, or it's just kind of not what they were expecting. That's okay. If that's something that comes up, I encourage you to talk with the business broker about it, and we can enter into a dialogue with the seller to see if that's something that we can mitigate, either through terms or better understanding. Sometimes it's a price reduction, sometimes it's restructuring the deal a little bit. If it's something that we can mitigate and the buyer still wants to do the deal, then we move forward. If it's something that we simply can't mitigate, then the buyer will trigger the due diligence provision, which is a contingency of every offer that we write. And you'll get all of your escrow money back, and we will completely unwind the transaction. And the only parts that will be binding, again, are the non-disclosure portions and things like that are really appropriate. So The offer itself is really just a way to say, what is the buyer thinking, and present it in writing and signed to the seller for the seller to consider, and the seller will either accept it, reject it, or counter it, right? And you don't have to be nervous about putting any money in escrow. Your business broker controls the escrow account, and if there are any of the contingencies that are triggered in that offer, you'll get all of your money back and you just simply walk away. A good business broker is never going to force you to buy a business that you don't want to buy after you've had the opportunity to inspect it. So hopefully that takes away a little bit of the nervousness about making an offer. And if you have any additional concerns about that, please do reach out and let's have a conversation about that. Hope you're doing well. Thank you so much. Have a great day. Bye-bye.